Should I do a cash out refinance? Should I get a home equity loan, or should I get a home equity line of credit? That's a question I'm being asked on a regular basis, and especially in this environment right now, we're in spring of 2022 and interest rates are skyrocketing. So people are confused and don't understand their options. So let me break it down for you very, very simply. A home equity line of credit has some advantages and disadvantages. The advantage is it's super cheap. You're not going to spend a lot of money to get the home equity line of credit. You're also not going to have a significant monthly payment because you're only paying the interest that's due. The disadvantage is you're only paying the interest that's due, so your payment is not going to pay down the principal, and it's a variable interest rate. So therefore, typically variable. Therefore, your rate is tied to prime, and the prime rate is expected to climb significantly going forward as we continue to deal with inflation. So home equity line of credit, if you have a really, really low mortgage rate on your primary mortgage, and you're not trying to borrow a lot of extra money, and it's really about how much money you want to borrow compared to what you owe on your first mortgage, a home equity line of credit might be a great option. The second option is to do a home equity loan. Great news about home equity loans is that they're fixed interest rates. You don't have to worry about the rate going up, but it's kind of like your car loan. You borrow the money once, you don't have access to more money down the road. Your payment is principal and interest. So therefore you have a fixed payment over a fixed amount of time, but home equity loans rarely, if ever, give you 30 years to pay them back. So your payment on a home equity loan is going to be higher because you're paying back principal and interest over a shorter amount of time. There's also relatively inexpensive to obtain. And so if you need the money for a short amount of time, or if it's a small amount of money compared to the big amount that you owe on your primary mortgage, you're better off getting the home equity loan or home equity line of credit. A full refinance in today's market often isn't the right choice, but sometimes it is. The first question is, what's your current interest rate? If you refinance in the last couple of years, you probably have a rate that's in the 3s or in the 2s. And currently we're in the mid 4s and we're pushing up from there. So there's a good chance we're going to be potentially into the 5s this year. And you're going to say, John, why would I want to consider refinancing my 2.5% interest rate for a 5% interest rate? Well, I'll give you a great example of why. Because if, for example, you owe $200,000 on your primary mortgage and you're trying to pull out another $200,000, then you're going to double your mortgage balance. And if you have your first mortgage right now at 2.5 and you go get a home equity loan, a fixed rate, that's probably going to be at 8 or 9%. So your average interest rate for the $200,000 at 9% and the $200,000 at 2.5% is around a 5.5 to 6% interest rate. And that new home equity loan isn't stretched out over 30 years. It's over a shorter amount of time. So you're going to have a bigger monthly payments. But instead, if you refinance and put it all together, you have one monthly payment at an average interest rate that's significantly lower than those two separate loans together. And it's all a single loan, which makes it easier down the road. We think we're going to hit a recession in the next few years because the Fed is raising interest rates super quickly to slow down the economy and stop inflation, but they're going to overcorrect. They're going to slow down the economy too much. That is not expected to lower housing prices, but it will lower interest rates. The bad news about a recession is that it means that it comes with job losses. There are going to be people who are going to lose jobs. As long as you're not one of those people who lose a job, the fact is a recession is good for you because it'll allow you to refinance that money back into one loan at a lower interest rate. Whether you take out a home equity line of credit or loan today, or whether you do everything as one loan today, you're able to hopefully refinance in the next 2 to 3 years as we see interest rates come back down, assuming it follows the pattern that I think we're going to hit and hit a recession. We should see rates back in the 3s to potentially 2s in the next few years. I hope that helps with your options. I only do first mortgage refinances, but I have great clients or great connections to bankers who can take great care of you in getting a home equity loan or a home equity line of credit. So call me, set up a time for us to talk so that we can discuss the options and decide, are you better off taking everything out at one loan, or are you better off going and taking a home equity line of credit or a home equity loan? I'll be able to guide you and connect you with the right people to make that happen. If you have any questions, give me a holler and have an absolutely amazing day.